All right, so today we are going to be discussing the different strategies for purchasing a bank-owned property. And just a little bit about myself. My name is Elizabeth Balachova. I'm with Keller Williams Realty in White Plains. I'm on a team with my father. Most of you who may know Igor Kosnaparov. Most of you know him through Keller Williams, but some of you might not be aware that he actually also owns a separate brokerage where he only sells bank-owned properties. And I myself learned real estate through bank-owned properties. So that was pretty much the first thing I started learning. So I've always been comfortable dealing with these types of transactions. So if anything, that means I'm scared of nothing. I've pretty much seen the worst when it comes to real estate transactions. So I feel like I'm pretty bulletproof for anything that can pop up in a transaction. So we're going to be going over all of that today. Now, before we get started, I want to hear from some of you your thoughts on bank-owned properties. If you're working with a client and they send you a bank-owned property, what is your first thought, or what is maybe perhaps a myth that you have heard from just the industry about bank-owned properties, or just any fears you have in terms of dealing with a bank-owned transaction, because we're going to debunk any myths or fears you have today about dealing with this type of transaction. So if anyone wants to unmute themselves and kind of give me, their feelings on dealing with a bank-owned transaction.
Sure. Uh, Basically, the level of difficulty in dealing with the banks, coming up with, an offer that the bank would accept, and or dealing with all the underlying issues, because many issues with bank-owned properties aren't availably present when you start going into that. So
Yeah.
from what I've heard from others is that it takes that much longer to process a deal on a bank-owned property as opposed to just a regular seller.
Okay. All right, well, I'm glad you brought all of those points up. So the first thing is trying to determine an offer that the bank is going to accept, dealing with the issues that are potentially not disclosed in terms of the property itself and the condition, and then the length of time for a closing to take place. So those are all really three great points. We're going to cover them all today, and most of them are not as bad as you think. So for me, just to give you a little bit more background, like I said, my father owns a brokerage that deals separately with bank-owned properties. My last three closings actually were all bank-owned properties. And within my career, I've personally closed a total of 8 bank-owned properties. And then I also have the knowledge from the back end, from dealing with the brokerage and viewing the portals and how offers are processed and everything. So I'm going to give you some insights on how kind of the banks think, right? I'm going to give you a little insight on how they operate, what their motivation is, and how they make decisions, and kind of how to navigate that and then be more successful in terms of closing on a deal and getting that property for your client. So right now I'm going to share my screen. We're going to start the PowerPoint presentation, and then towards the end, hopefully we'll debunk any fears you may have in terms of moving forward and helping a client purchase a bank-owned property.
Okay, cool.
Really quickly. Okay, so we already kind of went through this. What myths have you heard about bank-owned properties or fears? So one of them is what kind of offer to present, our banks reasonable? Uh, does it take a long time to close on a bank-owned property? And what underlying issues does a property have that we might not know about? So we're going to go a little bit over all of that today in this presentation. So in addition to that, what we're also going to learn is the foreclosure timeline. So I'll just give you a little bit of a background of, when someone gets foreclosed on and then the process after that until it goes on the market. So we'll go over that a little bit. Understanding the mindset of all parties involved for a bank-owned transaction. I'm also going to stress this point. You want to be the local economist in your market, especially when you're helping someone buy a bank-owned property. You need to know the value of that property, especially if it's in a little bit of worse condition. You need to know what that property potentially could be worth. So it's good to understand your market. We're also going to go over how to set expectations for your buyer. Anyone can purchase a bank-owned property, but it might not be the best fit for everyone. So it's important to set up those expectations so your client knows what they're getting themselves into. And then also the most important thing is providing exceptional buyer service for your clients and helping them purchase a bank-owned property and protecting them throughout the transaction so they're not kind of left with something more than what they had bargained for. So right now we're going to go over the process of a foreclosure a little bit. So, it's a very tricky business to be in when you're dealing with foreclosures, because unfortunately that meant that someone had went through a hardship and their property, was foreclosed on and the bank pretty much repossessed it. And there are four, reasons why, property usually gets foreclosed on. And it's good to know this because you'd be surprised how many people ask, well, why did this property get foreclosed on? To me, it's such a silly question. But it's good to have that knowledge when you're explaining this to your clients. And with everything that's going on right now in our market with this pandemic, it is definitely going to cause a spike in foreclosures within the next year. Even with forbearances and evictions being held off, there are still going to be consequences once all of this is over, unfortunately. So for example, some of the reasons why property gets foreclosed on is negative equity because of a market shift. So for example, right before 2008, when the market crashed, the prices were, pretty much inflating at a high rate. And most of those homes will never be worth what they were during those few years. So now people have negative equity. So if they sold their home, they're not going to be able to pay back the bank the mortgage that they took out. So that's, a main reason. Unemployment. So especially with everything that is going on right now.
So we can easily see from this graph that there's.
Okay, I apologize about that. So unemployment, especially as everything going on right now, a lot of businesses are shutting down because of the restrictions on who is considered essential or not. That's going to cause a lot of people to not be able to afford their mortgages. Other personal crises, so whether it's death, divorce, again, this pandemic that's happening, this is definitely going to cause a spike in future foreclosures. And consumer confidence could potentially cause that as well. So a lot of people are uncertain with what's going to be happening in the future, and that can either help or hurt. Some people might be optimistic, thinking, well, prices are going to drop, so more people are going to buy, or some people might hold back because they don't know what's going to happen with their job security or things like that. So this is definitely going to cause a spike in the future in terms of foreclosures. Now, this next slide, I'm not going to go too much in detail because I really want to focus today on how you can service your clients, but I also think it's important for you to have an understanding Now, whenever you go on Zillow and you see something labeled as a pre-foreclosure, this is usually the first step. Whenever someone gets a notice of default, it's technically in that pre-foreclosure stage that you see. Now, there's a lot of other options for that homeowner before they get foreclosed on. They can do something called a deed in lieu, where essentially they're just giving back the property to the bank. Someone can potentially do a short sale where they hire an agent to sell the property for them before they get foreclosed on. And then sometimes the banks can just decide to move forward and foreclose on the homeowner. So there's a lot of steps before it actually gets foreclosed on. And in New York State, it could take years potentially before that even happens. Usually one of the first steps is the trustee sale. This is the courthouse auctions that you may be familiar with. So in Westchester County, it's in White Plains, the courthouse that the auctions take place. These are usually pretty risky because most of these properties are being sold with any liens attached to them. So most properties don't sell at the courthouse auction unless it's a very savvy investor and they've done a title search on the property and they know what they're kind of getting themselves into. Now, if the property does not sell at the auction, at the courthouse auction, then the bank kind of takes repossession of it and they move on to the next steps. So here, once it's foreclosed on, you have the trustee sale. Now it's moving forward, it's officially foreclosed on, and now the bank is going to resell this property and get it off their books. One of the first steps is auction pre-list. I don't really see this that often. Most of the time they assign it directly to a listing agent, but sometimes they can try to sell it through an auction online. This is separate from like auction.com or hubzoo.com. If you're familiar with those, this is something a little bit different. But usually once the property is officially foreclosed on, it's assigned to someone called an asset manager. Now, this is the person who makes all the decisions and pretty much does the negotiations on a bank for offers. That's the thing that's different with bank-owned properties. You're negotiating with the bank. Even though there's a listing agent who is marketing the property, you're dealing with the asset manager. But once the asset manager is assigned, they then find an REO specialist to list the property. So like, for example, my father, he is someone that the asset manager would reach out to and assign the property to so they can list it. And then once it's on the market, it's pretty much like a regular transaction, goes through most of the same steps, and then it sells. If the property does not sell for whatever reason, the FDIC, which is a government agency, will actually purchase it back. I don't know if they do this anymore. I think they did this a few years back when things were a little bit more severe, when there was more foreclosures. I don't see that happening as much. Usually most bank-owned properties sell when they are on the market. So that's pretty much a background of the foreclosure process from by the time the homeowner gets the notice of default to the point they get foreclosed on, and then once it officially goes on the market. And all of this takes time. You know, for example, with our office, if we have a property that's assigned to us, it can still take months and even years for it to actually go on the market because if there's a title issue or anything else, or if the bank decides they want to do any repairs to the property, all of that will delay the process before it officially goes on the market for sale. Now we're going to go in depth about the mindset about all parties involved, and again about understanding the market when dealing with bank-owned properties. Now, when you're dealing with bank-owned properties, it is a little bit different than buying a traditional property that is being sold by a homeowner. Most homeowners, when they sell a home, you know, they want to seek a positive return and looking to purchase their next home. But when you're dealing with a bank-owned property, you're dealing with a bank. That is who the seller is. And they're looking to just get the property off their books. Now, when you're dealing with buyers, when they're looking at traditional properties, you know, they're looking to see a home that fits their needs and that's at a reasonable price. Although when they're looking at bank-owned properties, their mindset is that, you know, they want to get the best possible deal or even sometimes a steal, which I will tell you up front, when you're dealing with a bank-owned property, they are selling the property for the fair market value. even if it's in distressed condition and it needs a lot of work, they're going to sell it for whatever that property is worth in that condition. It's very rare that you're going to, get a bank-owned property for, a significant amount below the market value. Now, when you're dealing with lenders, for a traditional property, they're open to providing loans and encouraging, homeowners to purchase properties. Although when it comes to bank-owned properties, lenders are a little bit hesitant. And they might be a little bit more strict with the condition of the property because they don't want the buyer to focus too much on updating their home and fixing it and then not actually paying their mortgage. So with lenders, their motivation is a little bit different and they're going to be a little bit more strict with the guidelines when purchasing a bank-owned property. Now, when you are an agent, when you're dealing with a traditional sale, you're eager to help and you pretty much know how to handle the transaction. But there are many agents out there who do not know how to help a buyer with a bank-owned transaction, to no fault of their own, because when you truly think about it, when you're going through your licensing course, they rarely mention bank-owned properties, and there's not a lot of information out there. So most agents don't even want to help buyers with bank-owned properties and will advise them against it. And I will tell you, a lot of deals that I've gotten myself were from buyers who already had an agent but did not want to help them with that particular property, and I ended up helping them purchase that property. So those agents are actually missing out on opportunities and pretty much just giving up business because they don't want to learn the knowledge of managing a bank-owned transaction. And this goes into the next slide. If you've ever taken my 6 personal perspective classes, this chart will be familiar. This is something that is very popular within Keller Williams. And this is the E to P model, which means being from entrepreneurial to purposeful. Now, as a salesperson, we definitely are motivated and driven, but that is only going to take us so far. And if you're an agent who is out there who does not want to deal with bank-owned properties and pretty much just giving the business away, you're not going to be able to exceed a certain level of achievement. You are letting go of an additional source of opportunity, especially as we transition into a shifting market where we become more buyer heavy and there are more foreclosures on the market that are going to be priced, a little bit more aggressively. Those are the properties that might go first. And if you're not willing to learn how to deal with those transactions, there's a lot of business that you're missing out on. Now, everyone who's attending this class or watching this, I know that that's not you. You are all eager and willing to learn how to manage a bank-owned property transaction, and you're going to be able to succeed because you're going to learn all the steps necessary to help buyers with this type of transaction. Now, the most important thing that I'm going to stress is, again, be the local economist. Really, truly understand what's going on in your market. Now, when you're dealing with a bank-owned property, you kind of have to work backwards. When you're doing comparable sales, for example, there's not going to be as many properties to compare it to. You're going to have to compare that property to move-in ready homes, right? Because most properties on the market are going to be in reasonable condition. But if you have something that's a little bit outdated, you need to learn how to determine what that value is or what the value could be once it is fixed up. And that's a great way to help your buyers actually earn equity in their property. They purchase something for a little bit less because it's outdated and they fix it up themselves and now they have equity within the home. You also want to understand days on market, especially when you're dealing with bank-owned properties. The biggest tip that I can stress with bank-owned properties is that within the first 30 days, they are not flexible with price. It is very rare that they will accept something lower than what they are asking for, and they will usually reduce the price before they accept another offer, just so they can get a little bit more attention on the property, because of course, once you reduce the price, it pops up to the top of the list and more people might become interested. So it's important for you to understand when you're looking at a bank-owned property, how long has it been on the market? Because that's going to help you determine what kind of offer to submit. So I know that was one of the questions before. How do I know what is a reasonable offer to put on a bank-owned property? Now, I'm not saying that whatever price they list it for is what it's going to sell for. But it's important to know when you're negotiating with them, their mindset. So within the first 30 days, they're typically not flexible. Even if it's overpriced, they're just not going to budge because they're willing to wait and see what kind of offers they're going to get. So when you're submitting an offer and they reject it, it doesn't mean that they might not accept it at a future date. That's just kind of their process. They have to wait it out and see what they could potentially get. So if you have a buyer and they want to submit a low offer and it's only been on the market, for 2 weeks, you just have to set that expectation that it's most likely going to get rejected. And then, of course, depending on the condition of the property, you want to know what's that resale value going to be, if it is fixed up. Because you also don't want your buyer to be put in a hole where they have to invest a lot of money to fix it up and they're not going to get that money back because they're going over what the potential appraised value could be. Of course, you also want to know interest rates and financing options for your buyers. If a property is in, distressed condition, they are limited to what kind of loans they can take out. So you need to know what kind of options you can provide to them. You also want to know local economic factors. So for example, we're in a pandemic right now. So a lot of things are going to be changing. So you need to understand, how is that going to affect the value of the home? And you also want to understand renovation costs. Because again, if it's in distressed value and you're trying to figure out, well, what is the home worth in its current condition, you also need to know what is it going to cost to fix it to bring it up to the same value as all the other properties in the neighborhood. Now, you don't need to know the cost per item, but it's good to have a general idea or have a few contractors that you trust that you can ask their opinion. So that way, when you are trying to figure out the comps or what the potential resale value is, you have the correct numbers to use. Now, the good thing with bank-owned properties is that every buyer must be represented by an agent. A buyer cannot submit an offer on their own or try to do a for sale by owner type of situation with a bank. A buyer needs an agent to help them to submit an offer and manage the transaction for them. So that's good for us, right? They need us to help them, and that's why it's important for you to know how to help them and navigate them through the transaction. Now, when you are working with a client, so typically when I'm in a consultation with a buyer, I do talk about foreclosures with them. I have my own sheet where I go over the process of a transaction, what they should be aware of. And again, it's not going to be for everyone. If you have someone who prefers something that is move-in ready, a bank-owned property might not be the best, because unfortunately, a very common theme with bank-owned properties is that they're not in the best condition, mostly because they've been sitting vacant for a while, because the foreclosure process takes so long, and things just naturally start to deteriorate. So there are going to be issues when you're dealing with bank-owned properties. Although if you have a buyer who is maybe handy or has family in construction, or maybe their budget is a little bit on the tighter end and they're not going to get their ideal home within their ideal neighborhood, you can help them by looking for a bank-owned property, because generally they are priced a little bit lower, but of course you have to factor in it's because of any renovations that might be needed. But if they have other resources, again, family construction who can help fix it up for them, then that could be a very good option for them. If it's a lower price property, then any money that they have saved up could be used for renovations. Another thing is it's a little bit easier to negotiate closing costs with a bank-owned property because they're not as emotional as a homeowner. When you submit an offer to a homeowner and it has closing costs, they start asking a lot of questions. What's the closing cost? Why do I have to pay for that? Whereas with the bank, they don't care. All they care about is their bottom line and what they're going to net. So it's a little bit easier to actually negotiate that. And I've been successful in negotiating closing costs for buyers as well for a bank-owned property. You do know that the seller is motivated. They're not going to back out for personal reasons and not sell the property. Although I will question if they're motivated in their price, because some of these banks are a little bit unrealistic, but for the most part, the property is going to sell. For first-time home buyers, some banks will actually give priority to first-time home buyers in terms of submitting an offer. So this is typically called an investor hold. So they won't review any offers from investors for the first 2 weeks, for example. So that way it gives homeowners an opportunity to submit offers and get a chance to purchase the property. And then of course investment opportunities. So whether you're working with a first-time investor or someone who has a portfolio, or even for a first-time home buyer, if they buy a home that needs some fixing up, and throughout the years, if they do those small projects on their own, when they go sell the property, they might get a good chunk of equity and make a good sale when they're ready to make their next step. So I do explain all those benefits, but of course, it's not for everyone. You really need to set that expectation that there's going to be work that needs to be done. And if they're not able to do that, it might not be the best fit for them. Now, again, setting expectations when you're helping someone purchase a bank-owned property. Don't wait. Now, with bank-owned properties, a lot of them do sit on the market for quite some time, but that depends on how they price it. If they were a little bit too optimistic, yes, it's going to take some time, but if the property is priced right, it's going to go fast, just like any other property on this market, especially in a seller's market. So you don't want to wait. If you take too long with responding back to the bank or giving them any documents that they need, they will drop you and move on to the next buyer, or just drop you in general and see who else is going to come. So you kind of have to be quick-witted and on par when you're dealing with these banks. Now, I'm going to go more in detail about this next item. When you see a bank-owned property, most of the time it says as is, sold as is. And in a later slide, I'm going to explain more in depth what that really means. But regardless, whatever you see when you walk through the house, it is what it is. It's kind of funny. I actually do open houses on bank-owned properties, and people will walk in and point out everything wrong with the house. And I just stand there and say, okay, what's your point? You kind of have to know what you're getting yourself into. So, if you look at the property, it's outdated, there's broken tiles here, things are missing, it is what it is. Either you negotiate that into your price, or that property is not the best fit for you. But whatever you can see visually with your eyes, that's what as is truly means. And I'll go again more in detail. You want to make sure you have ironclad financing or cash. Not all bank-owned properties require cash. I know a lot of people say that you can only buy a bank-owned property with cash. Depending, of course, on the condition of the property, a lot of them can pass for conventional financing. As long as the utilities work, you can get conventional financing. But if, let's say, the bank cannot turn on the utilities, because that's what happens with bank-owned properties. They turn everything off. They winterize a property, meaning that they drain the water from the pipes and they turn it off, and they turn the electric off. But if the bank cannot turn all that back on, you might have to get other types of financing like renovation loans, which we'll talk about. But if you have a buyer who's a little bit shaky, you don't know if they have the full down payment amount, or if they're getting it as a gift from a family member, but the family member is out of the country, all of that is not going to help your buyer, because again, you need to be very quick and you need to provide everything to the bank. Otherwise, they're going to just drop you. So you want to make sure that you have a very strong buyer. You speak to their mortgage lender, you know who you're dealing with, because that's where issues will pop up in a bank-owned transaction. And of course, you want to follow instructions on the contract paperwork and pretty much do everything that the bank requires, because if you submit an offer and you're missing a document, they're not even going to entertain your offer. They're very sensitive to things like that, just because they're dealing with so many properties and so many offers. So you really need to follow the instructions and do everything the proper way. Otherwise, you're not going to be able to get that property for your buyer. Now, this is the most important part, and I'm going to talk a little bit about my experience as well with some of the banks that I've dealt with, some of the transactions that I've gone through. But when you are helping a buyer purchase a bank-owned property, the services that you provide is really going to make the difference in being successful and helping them get through the transaction. Now, before we get started, where do you find buyers? Of course, this is always important to talk about. You want to be, of course, again, the local economist. If you understand the bank-owned transaction and the process, if you understand the market and how to do comps for a bank-owned property, because again, you have to do a little bit backwards, especially if you have to consider what the resale value is once you fix it up. Once you get to that point, you can start offering classes. You can do a class for buyers and giving them information on buying a bank-owned property. And they don't even necessarily have to end up buying a bank-owned property. They can just buy a traditional property, but because you have that additional resource, it definitely puts you in the front lines. You can also, of course, with everything going on right now, we can't really do open houses, but I've done open houses on our bank-owned properties, and that's actually very rare. I don't really see a lot of agents doing open houses on bank-owned properties. So, you know, you can create relationships with other agents who you notice who have bank-owned properties and do open houses for them. And trust me, people will show up no matter how distressed that property is. People will be interested and they will show up. And you want to make sure, again, that you understand the market and the process so you can help and guide them. And of course, I'm going to throw in here, if you want to do Facebook ad campaigns through Command, which is Keller Williams CRM, you can do Facebook ads targeting people who do want bank-owned properties. And again, they're going to reach out to you and get that information. You can help them. And of course, most people don't even end up buying a bank-owned property. We have people who call us all the time and they end up buying a traditional home because they find out that it's not a good fit for them. But it's always good to have that knowledge in your back pocket so that way you don't miss out on those opportunities. Now, there's 3 different buyer types who would be interested in purchasing a bank-owned property. You know, you have move-up buyers. So you have someone, you know, they had their starter home and now they need something bigger. And, you know, they may have thought they might not be able to afford, you know, the home that they're looking for. But if they have a bank-owned property that fits their needs in terms of bedroom size, location, you know, just needs a little bit of updating, that could be a good fit for them. Now, something that I am going to mention is, when you're dealing with bank-owned properties and you're submitting an offer, you really don't want to have too many contingencies in place. Now, you could have your typical contingencies. So for example, inspection, financing, all those things are fine. But most banks will not accept a contingency on the sale of another home. So keep that in mind. So if you have a move-up buyer and they need to sell their home before they can purchase another one, and they kind of want to do, you know, 2 closings at the same time, that's not going to happen with bank-owned properties, because once they set a closing date, that's a closing date. And it's very rare that they're going to provide any exceptions or extensions for the closing date. So unfortunately, that might not be the best option for them. And again, this is what you would explain to your client. If that's what they're looking for, you know, a bank-owned property might not be the best fit for them unless they can afford to manage both mortgages until they sell their original home. Now, first-time home buyers, it could still be a good fit for them. It doesn't have to be their second home or an investor. First-time home buyers can buy a bank-owned property. You just have to guide them and understand their expectations and what they're looking for. Again, if they want something move-in ready, it might not be good for them. But I've helped many first-time home buyers actually with foreclosed properties. And of course, we have investors. And I'll go over that a little bit in detail with you, how you can help investors with bank-owned properties and what they should be looking out for, whether it's their first investment or if they have a portfolio. Now, I'm going to go in detail the process of a transaction for a bank-owned property. Now, it's typically very similar to any other transaction, except for there's one thing that's flipped, which is when you can do inspections. So of course, with everything going right now, we are limited to virtual showings, right? So if you virtually show someone a bank-owned property and they're interested and they want to submit the offer, you do that and you negotiate. Once your offer is accepted, you move straight into the contract process. Now, the reason why this is, again, as I mentioned before, with most bank-owned properties, everything is turned off. The water, the electric, everything's turned off, and the bank does not want to turn it on unless they know they have a motivated buyer, because then they're just going to keep turning it on and off. Because with bank-owned properties, they go through so many accepted offers, and most people back out, or they don't do all the right steps, and the bank drops the offer. So sometimes they go through a few offers before they actually go into contract. So to avoid doing all of that extra work, they want to wait until they have a serious buyer in a contract, and then they'll allow you to do inspections. So that's the one thing that's a little bit different about a bank-owned property. Now, you can still do a contingency on inspections, and you can still back out. So there's no fear, you're not locked in the property and they have to buy in and they have to buy it as is. It doesn't mean you can't renegotiate. I'm going to talk about that a little bit more in detail. But that is the one thing that's a little bit different. You have to wait to do inspections. Now, this doesn't mean you can't bring an inspector to the property before you go into contract, or bring a contractor to the property. Although if everything is turned off, there's going to be limitations to what they can look at, but a contractor can at least walk around, give you their opinion on the structure, the foundation, if they see any missing pipes and stuff like that. So it doesn't mean you can't bring people to the property, but you can't do a full and true inspection until you get to that point once you're in contract. Now, when you are helping someone submit an offer or looking for a bank-owned property, you want to explain to them the different loan options that they have. So like I mentioned before, you can use conventional financing for a bank-owned property, but of course the stipulation is all the utilities must be in working condition, right? Because when the appraiser goes there, they're going to want to make sure that everything's running. If it needs updating, there's a few cracks here and there, they're really not going to nitpick. And so, they can use the conventional financing. But if it's a little bit more extreme, such as there's missing pipes, there's a crack in the foundation, anything like that, where it's a little bit too severe, there's mold, all that kind of stuff, you're going to have to get a renovation loan. And there's different types. There's the FHA 203K loan. So again, if someone originally was using FHA financing, there's a renovation version of that. Then you have the home style loan, which is kind of more the conventional version of that. And each loan also has a limitation on how much you can take out for the renovation part. Because the way the loan is structured is a portion of the loan goes towards the purchase price, and then the other portion goes towards whatever cost of renovation is. And that's where you have a contractor help you and give you a bid. And of course, again, this is where you need to be the local economist, right? Because when you're negotiating, you need to know, what is that home going to be worth once it's fixed, right? So if the most the home would be worth is $500,000 in its best condition, right? And the bank is asking $450, and a contractor is telling you it's going to cost $100,000 to fix it up, that means their total loan is going to be $550. And now you're exceeding what that home is going to be worth. And you need to know all that and kind of help determine that for your buyer. And that's how you
All right.
Okay. Now, in terms of FHA and VA loans, this is going to be a little bit more tricky because with FHA and VA loans, they are very strict with the condition of the property. So anything as simple as peeling or chipped paint is going to cause a red flag. So it's just going to be very difficult to purchase a bank-owned property with those two loan types. I'm not saying it's impossible. There are some bank-owned properties where it was taken very well care of, and it wasn't vacant for too long. So it's not impossible, but it's definitely very rare. But this is what you need to know: different lenders who provide these types of loans, especially when you're dealing with renovation loans, because they can be a little bit tricky. They do take a little bit longer. So of course, when you're negotiating, you need to allow for, a longer closing date when you're dealing with a renovation loan, because they could take 60 days. And these are things you need to be aware of. And you want to make sure you have a really good lender on hand who knows what they're doing and who's going to, have your back and make sure the transaction closes on time. Now, when you're communicating with the banks, most banks have a portal where you submit the offer. Because again, you're negotiating with the bank. You're not negotiating with the listing agent. So when they counter back or whatever they do with your offer, it's the asset manager who is responding to you. So you want to make sure you cross all your I's. What is it? Cross your T's, dot your I's, and make sure that everything is in place. If you're submitting proof of funds, make sure it's dated within the last 30 days, because otherwise they're not going to review the offer, and then you're just going to delay the process and potentially miss out on that property for your client. Now, when you're dealing with a multiple offer situation, this is something that's almost automatic. The second a bank gets 2 or more offers, they initiate a multiple offer situation. It's not like a regular transaction where, the listing agent gets a few offers, they discuss it with the seller, do they decide, should we counter back each of them individually, or do we do a multiple offer situation? With banks, it's just automatic. They do a multiple offer situation. Even if the other offer is incredibly low, it's $1, it doesn't matter. They're going to do a highest and best multiple offer situation. So I know a lot of people, especially when I'm dealing with buyers, they're like, well, how do we know they have another offer? I promise you, they do have another offer. They don't do weird, sketchy things like that. When you're framing your offer, you want to make sure your terms are clear and your contingencies are clear. So like I mentioned before, they don't like a lot of extra contingencies. Inspection contingencies are fine. Financing contingencies, clear title, but things like, a contingency on the sale of a home, that's not going to fly. You want to make sure that your terms are clear. So again, if you have a buyer who is using renovation financing, you want to make sure that you ask for 60 days or more for closing, because otherwise you're going to be stuck with whatever amount the bank gives you, and if you don't close on time, that's going to be a big issue, and I'll talk about that. And again, just attention to detail, because once your offer is submitted and it's accepted, you can't change anything. Otherwise, you have to start from scratch. No matter how small it is, whether you put the wrong down payment amount, you will have to start over and resubmit the offer if there's any mistakes. Now, again, we talked about this a little bit before. What does as is really mean? So like I said, when you walk through the house, whatever you can see with your eyeballs, you can't really nitpick. Of course, you can negotiate and submit a lower offer, but you can't really use that as a reasoning to submit an extremely low offer. Now, that doesn't mean you can't negotiate certain items to be fixed. Now, this is something, again, that kind of comes with experience and understanding what the banks are willing to do. Now, again, cosmetic work, anything you can see with your eyes, the banks are not going to be too friendly or too flexible on resolving it. But now let's say you do an inspection. Now remember, you're not allowed to do inspections until you're in contract, right? And I almost feel like that gives the buyer leverage, right? You have the bank locked in, right? You are in contract with them. They want the deal to close. Now it gives you leverage. So if something pops up, let's say there's an underground oil tank and let's say it's leaking. You can potentially bring that back to the bank and renegotiate. Now, I'm not saying that they are definitely going to lower the price or resolve any issues, but it doesn't mean that they won't. So it's very touch and go. Every bank is different, but I have been successful in having banks actually provide a credit to remediate, a small oil spill. So it's not impossible. So anything that pops up later on that you find out, you can actually have the bank resolve. And that would be the same thing for a septic system. You can't really test that unless the water is turned back on. Another tip for you guys, if you're dealing with a bank-owned property and the bank, for whatever reason, cannot turn the water back on, there are certain septic companies who actually can still test the system. They can pour water into the tank and test it for you. So again, this is where it's important, where you have vendors lined up that who can help you in these terms, certain situations. I know inspectors who have generators where if the bank can't put the power back on, inspectors will bring their own generator and turn everything back on so they can test things for you. Another big ticket item is permits and violations. I'm going to talk about this a little bit more in the next slide, but this is doing your due diligence. When you're dealing with a bank-owned property, just assume the worst. Assume nothing was done with a permit, assume nothing is working, because that's the best way to kind of protect your buyer from anything that could potentially pop up in the inspection or once they purchase the home. Now, for some reason, it's very common that a lot of bank-owned properties have permit issues or violations. It's just something that I see often. So it's very important for you to find out. Now, again, once you're in contract, it is my opinion that you have more leverage. So let's say the bank was not aware that something was done without a permit. Let's say it was not advertised in the listing and you find this out on your own by going to the building department. This is a tip. This is off the record. My recommendation would be not to bring it up until you're in contract and then see how the bank responds. Because the second you tell the bank something, then they're going to be like, okay, thank you for that information. We are going to sell it as is. And they're going to tell everyone, you know, this bathroom is illegal. We're still selling it the way it is. And they're not going to reduce the price. You know, those are the games that these banks like to play. So a little, you know, off the record tip. If you have a bank-owned transaction, you find out there's a violation, your client is still interested, I would wait until you are in contract to bring it up and see if the bank will resolve it. And I've actually had that happen where you find out that something was a violation and I brought it up once they were in contract and the bank actually agreed to resolve it. Now, again, I'm not guaranteeing every bank will resolve the issue. They can say, okay, you know what, if you're not interested, that's okay. We're not going to resolve this issue. We'll release you from the contract. We're going to put it back on the market and sell it as is and advertise whatever the issues are. Every bank is different. Like, for example, we had this one property that had a huge oil spill that a buyer had, you know, discovered once they did the inspections. They wanted to renegotiate. The bank said no. They put it back on the market and they attached the inspection report with the oil spill and still was asking for the same amount. So every bank is different. Some of them are a little bit crazy, but it doesn't hurt to try. I always tell the buyer, it doesn't hurt to try, but also set that expectation that they might not do it. So it's that kind of thing. It's better to ask than to do it at all. Now, you want to protect your buyer because when you're dealing with a bank-owned property, as it was mentioned in the beginning of the class, nothing's really being disclosed because the bank themselves, they don't want to know what's wrong with the property. A lot of them don't even test anything or do anything to find out what is going on with the property. All of that is the responsibility of the buyer. So it's very important that you do your due diligence. When I sit down with a buyer, I tell them, you know, buying a bank-owned property, it's really not that risky. It's almost very similar to a regular transaction. The only thing you need to worry about is the house itself. We kind of need to be detectives. What is wrong with this property? What violations are on it? What's going on with the foundation? What's going on with the utilities? That's the only thing you really need to worry about. So when you're helping a buyer, you want to protect them. So you want to explain to them the transaction process. So it's a little bit different only in regards to the inspection. So you want them to know that up front. You want to do your due diligence. Now, we should all be doing this for any property, right? Any homeowner can do something without a permit on their property, correct? So regardless of what property it is, you want to do your due diligence. But of course, with a bank-owned property, just assume something was done without a permit. And then you also want to make sure you know how to read these documents. So for example, I had this happen to me before where I went to the building department, everything had a permit, the deck, the pool, and I was like, great, everything is good. And then when the appraiser went, they had realized that the deck actually had an extension. So although there was a permit and a CO for a deck, there was not a permit or a CO for the extension. Now that caused a lot of issues. We had to bring it up to the bank. Fortunately, the bank did agree to resolve it and close out the permit. Of course, that caused a huge delay. And it caused a huge delay because since the bank was going to resolve it, they have their own process to dealing with those things. They have to get multiple bids from a contractor, and the contractor has to do the work, and it's just a lot of paperwork, and it just takes a little bit longer. So that is the only thing that would actually delay a bank-owned transaction. If something, let's say, pops up, you find out about a violation, the bank agrees to resolve it, that's really the only time there is a delay in a transaction. But again, of course, it's important to know that up front. So like I said, you get more leverage when you bring it up once you're in contract, but you want to know about it beforehand. You want to find out once you're in contract. You want to know beforehand what you're getting into, because you don't want the buyer thinking they're going to close within a certain time frame, and now it's going to take a few extra months because you have to deal with the bank accepting bids, doing the work, and then if the building department needs to get involved, that whole entire process. So you want to protect them. You want to protect your buyer from finance. Now, again, this is for any transaction, right? You want your buyer to have the best lender, who's the most competent and who's going to help them, especially if you're dealing with a little bit more tricky financing, such as renovation loans. You want to protect them by having experienced vendors. The number one thing I'm going to mention is attorneys. I've literally had attorneys tell buyers not to buy bank-owned property, which is ridiculous because they don't want to do the extra work, or deal with the contract process with the bank-owned property, right? With most bank-owned properties, the closing date is actually very firm. If you don't close on the specific closing date, the buyer will be charged a fee. It's called a per diem fee, and it's $100 per day. So if you don't close on time, that's going to rack up until the day they close. So most attorneys don't like that. But if you have the right people working on the transaction, you can close on time. My most recent transaction for bank-owned property that just closed last week, it closed within 45 days, and that was during a pandemic. So it is very possible that you can close on time and it'll be quick. The only reason why I would not is, again, if something pops up like a violation. But you want to make sure you have an attorney who is familiar with bank-owned contracts because they are written differently and you're not allowed to make changes to them. The seller attorney, they make the contract and it is what it is for the most part. And most attorneys don't want to deal with that. So you want to make sure you have a good attorney who understands the bank-owned transaction and who understands that time is of the essence and you have to close on time. Again, with lenders, you want to have an experienced lender who can close quickly so there's no delays, and then inspectors. So like I mentioned earlier, I know some inspectors where for a septic tank, for example, they can still test it if there's no water, or an inspector who has a generator if there's no electricity. So you want to make sure you have those team of people who can help you if someone's interested in a bank-owned property. Now, when it comes to closing expectations, so I mentioned that a little bit earlier, you have to close on time. Usually most banks, they want you to close within 45 days because they're motivated too. It's very interesting. And that was one of the myths that someone had mentioned earlier, that they take a long time to close, and they actually don't. My last 3 transactions I had that were bank-owned properties all closed within 3 months or less. And that's with issues popping up. One of the properties had an open permit violation for an oil tank, and I had to hunt down the person who did the work and make sure they get paid so they would close out the permit. And we still closed within a reasonable time. And 2 of those transactions were during a pandemic. So they do want to close as fast as possible. It's just when certain things like a violation that pops up, or if you have a terrible lender who, cannot get the file processed, who's delaying everything, that's the only reason why the transaction would be delayed. But you want to you want to make sure that everyone is on the same page and wants to close as fast as possible. So that way the buyer is not stuck with paying that fee. In terms of who pays what costs. So when it comes to bank-owned properties, again, it's pretty much similar to everything else. The only difference is somehow the banks had found a way to make the buyer pay the transfer tax. I don't know how. So as you may know, anytime a property is sold in New York State, the seller has to pay a transfer tax, which is $4 for every $1,000. But for a bank-owned property, the buyer pays it. I don't know why. I don't know how they got away with it, but that's just something that you want them to know. It's not a high cost. Of course, it depends on the purchase price of the property, but you just want the buyer to be aware of, what total cost do they have to pay for. And I would say that is the only additional fee that they would have to really worry about. Of course, any other inspections that they might do, but other than that, that's the only other cost that they would have to really worry about. And then what happens to liens? So many people don't want to buy a bank-owned property because they're so concerned about, well, what about the previous mortgage? And what about the back taxes? Is all that going to get paid? And the answer is yes. All of that is going to be taken care of. You're going to get a clear title when you purchase the property. That is the least of your worries. Your biggest worry with the bank-owned property is what is going on between the walls in that house. And that's the only thing that you truly need to worry about. And the only thing you need to protect your buyer from. And again, that's why you want to have, inspectors that you trust who can pinpoint those items for your buyers so they're not stuck with a big project after they close on the house. Now we're going to go over, the last thing we're going to talk about right now is dealing with investors, because of course bank-owned properties are going to attract a slew of investors because they want to get a deal, correct? But like I mentioned before, most bank-owned properties sell for their market value. Even if it's in poor condition, it's going to sell for whatever that property be worth in that condition. You're not going to get it for half of its value. So you kind of need to, set that expectation with investors as well. So again, looking at days on market, like I said, the first 30 days, they're not reasonable. So if you have an investor coming in wanting to submit a low ball offer, you got to tell them up front, the bank's probably going to reject it. You might have to wait a few months. There was one property where, I swear, it was months of back and forth negotiating with this bank because they were just so stubborn on their price and they didn't want to negotiate. They went through so many offers, so many accepted offers. They kept going back on the market. It went through so many highest and best. And then finally, after some time, they actually came back to us and said if we were still interested and wanted to accept our offer. So with investors, I usually tell them you got to wait, you got to try a few times. They're not going to submit your offer up front, but it's not impossible. But, you need to be realistic with them as well. When you're dealing with investors, you want to give them some other resources. So using other people's money. For example, you have hard money lending that's out there. So you want to be able to give those options to investors so they can, build up a portfolio of properties and use you to purchase and create that portfolio. You want to make sure that they require positive cash flow. So this of course depends on what their goal is. Do they want to buy property, flip it and sell it? Or do they want to purchase it and rent it? So you kind of have to help them figure out what's going to be the best option. How much work does the property need? And they'll pretty much help you with that part, especially if they're a contractor, an investor who has a contracting background, construction backgrounds, they'll kind of tell you what they think, the cost is going to be to fix it up, which kind of takes some of the workload off from you. And all you need to do is just tell them, well, this is what the home's going to be worth once you fix it up. They're going to tell you, well, this is how much it's going to cost to fix it. And then that's how you determine what's going to be the best price for them to submit an offer on. Also keep in mind, just know that there's a lot of competition. So when an investor is submitting an offer, you have to let them know that they are competing with homeowners, first-time buyers, right? So a first-time buyer does not need to make a profit, right? They just need to break even. Or if they really love the house, we've been in a market where a lot of properties are going for above the asking price just because of the inventory available. So you kind of need to set that expectation with investors. Like I mentioned earlier in the class, some banks will even put a hold on investor offers. So they might not be able to get that property if a owner occupant has submitted an offer. So that is, that expectation that you need to set with investors. Now, I'm just going to go back with communicating with banks. Now, I'm going to go a little bit over with negotiations. So like I said a lot, the first 30 days, they're typically not flexible. Or let's say they do a price reduction. Again, typically not flexible for the first few weeks once they do a price reduction. But I want to give you guys a story on actually one of my recent transactions that I just closed on when I negotiate with a bank. Now, I only know this because I've submitted so many offers on bank-owned properties, and I kind of know how they think. Now, my most recent transaction, the property was listed pretty much at $280. It was $279,900, and the property was on the market for less than a month, maybe 20 something days. So in my mind, I thought, they're probably not going to be flexible, but my buyer wanted to submit an offer of $240. Again, it was listed at $280. Now, I don't care. The banks, they don't have feelings. I said, you know what? We'll submit the offer and we'll see how they respond. What's the worst that can happen? They just say no, and we either submit a different offer or move forward. Now, I submit the offer of $240. Keep in mind, this property has been on the market for less than 30 days. I believe the first counter offer we received was 260. Now, in my mind, I immediately knew that I had it in the bag because let me tell you something. When a bank usually counters within the first month, they counter with something silly. So if it's listed at 280, they're going to counter back at 279. That's just how some of these banks operate. So when they do that, you know that they're not serious yet. They're still waiting around to see what other offers they get. But they countered at 260. To me, was a significant amount below what they were asking for. And my buyer and I talked about it. They said, what should we do? I said, do 240 again. Because the fact that they countered so low, I just knew they had no other offers, and they were kind of desperate. I mean, they didn't even bother to do 279. They did 260. So I said, let's do 240 again. And they were a little bit nervous, but they trusted me. So we submit another counter offer of 240. Now the bank countered back at 250. Again, I knew that I had it in the bag, and my buyer was eager. They said, let's just accept 250. And I said, no. I said, there is no way. They are countering too low. They're being too gracious. I said, we're going to counter back again at 240. And I said, what's the worst that can happen? They reject it, and then we just submit an offer of 250. So once I countered back at 240, the bank accepted the offer at 240. So it is possible. You kind of have to, it's kind of like a game when you're dealing with them. It's kind of like a poker face. So if a bank counters back at you really low, just assume they gave up their poker face and they don't really have anything on the table. If they're countering back at $1,000 below the asking price, just know that it's just not the time yet. But don't be afraid to see how low you can get the property for. And I knew there were no other offers on the table because there would have been a multiple offer situation, correct? Because like I said, the second you get 2 or more offers, that gets triggered and they initiate highest and best. So I kind of knew I had it in the bag. So you can negotiate. Of course, you kind of have to know what you're dealing with. So you need to be that local economist. You need to know the days on market, and you need to kind of understand the mindset of these banks. So that's just like a little story I like to tell, when you're negotiating with banks, kind of how they operate, how they counter back is a good indication of what they're working with. So that is the end of this presentation. I would like to hear from you guys any ahas or any myths that you feel that I have debunked, and what your opinion is now of bank-owned properties dealing with them. Okay, so I see someone in the chat wrote a question. It was Kenny. Does the inspection after contract also apply to short sale? And then with the home, okay, so the first part, does that apply to short sales? No. With the short sale, it's like a regular transaction. You can do the inspection beforehand. The bank-owned property, that's the only type of transaction where you have to wait until you are in contract. Someone else just asked a question, how do you get a list of REO properties? So the good thing with bank-owned properties is they typically all get listed in the MLS. That's the process. The bank requires that the property is marketed to its fullest extent, so they want it in the MLS. So most bank-owned properties will be there. There's no hidden bank-owned properties unless you have some, I don't want to say weird agent, but you have an agent, who's not in the local MLS, and they might put it, in the New York State MLS or Long Island MLS, although now we're conjoined, so that should not be an issue. So most of them are in the MLS. And you can actually do a search in the MLS for REO properties. So if you go to cross property search, there should be like a little section where you can add, show me all REO properties. And then someone actually responded, you can go to the county clerk office. That's for, properties right as they get foreclosed on. Like I mentioned, they get into class, the trustee sale or the courthouse step, but that's, before it officially gets foreclosed on and goes on the market with a listing agent. Does anyone else have any other questions or ahas? You can unmute yourself if, you want to ask something. I know Ceramus, you were the one who mentioned some of the myths or fears you had with bank-owned properties. Had I been successful in debunking any of those myths for you?
Yeah, absolutely, definitely. Especially concerning clearing out previous open permits and things of that particular nature, and or liens to the property that would need to be cleared out, because I know that those particular things would derail a closing, if
Yes.
if that was to come up during the process. So
Yeah.
absolutely.
Yeah. So again, of course, it's just doing your due diligence as any other transaction, finding out, what violations there are. That's going to be our job. Any liens on the property, that's the bank's job, and they're going to take care of it. So again, buying a bank-owned property, it's really not that risky. You just need to know what you're getting yourself into with the house itself. And that's where you have the inspectors or contractors to help you and protect your buyer from any issues that could pop up, once they purchase the property. Because once they purchase it, that's it. So you want to make sure you kind of find out everything possible with the condition. Okay.
And one thing that I wanted to ask you, because I did last year previously, I did have a client that was interested in an REO property in New Rochelle. And that particular property, from the outside, it, of course, you get in contact with the agent so that way you can gain access to the home and you can show it. And definitely when I entered the home was really in like disrepair, really in disrepair. You could definitely tell that at some point the utilities and the water was turned off in the property, but you can smell like a heavy odor of mildew. So that right away, that tells you water, something happened here, So now, was that disclosed about the property? No, it wasn't. Now, it just happened to be that upon leaving the property with my client, the next door neighbor said everything.
Neighbors are a good tool. They'll tell you everything there is to know about that property. So, that's one way to go about it. A property like that, there's like a spectrum, for bank-owned properties. Some of them are, in move-in ready condition. Some are slightly outdated, and there's some that they're falling apart. I've seen properties that were on fire at one point, and there's just a big hole in the back of the house. I mean, they come in a wide range. And of course, it's only going to target certain buyers. So again, setting that expectation. Not every bank-owned property is going to be a good fit for a first-time home buyer. It might be a better fit for an investor. Sometimes I can tell these things on my own just by looking through the pictures, just because I've just seen so many. So I can look through the pictures and I'm like, oh, I see there's water spots in the ceiling. There must have been a leak. I don't think it's going to be a good house for you. And unfortunately, a lot of that stuff's is disclosed. So that's why I said earlier, you kind of have to be detectives and try to figure out the most you can about that property and protect your buyer. And some listing agents, all of them are different, might even have attachments on the MLS with information about the property, if there's anything that they can disclose. But a lot of it kind of has to be, up to you as a buyer's agent and protecting the buyer. And a lot of that is just from experience, just from walking through a property. I'm at a point where I can look at a picture and tell, it's not going to be a good fit for them. But, all that comes with time. And of course, if you walk through the doors and you smell the mold, it might not be the best fit for them. So, but again, you don't know until you see it. But yeah, it's definitely the buyer's and the buyer agent's job to kind of figure everything out on their own when they're dealing with a bank-owned property. All right.
Right. Exactly. Thank you.
Okay.
Hello,
So,
hello, Elizabeth. It's Abel. I have a question about investors. Have you ever worked with a wholesaler before?
no, I have not. I'm slightly familiar of what that is, but that's a little different. That would not really apply to a bank-owned that probably should not be with a bank-owned transaction because you because the thing with wholesalers is I know they try to change who the buyer is or who's purchasing the
Yeah.
property. You can't really do that with bank-owned transactions. Whatever it says in the contract is what it must be. So like, for example, I actually had an investor, we were in contract for a property. They're buying it with cash, right? So we had a proof of funds with someone's name on it. When they were ready to close on the property, throughout the process, they decided to use hard money lending. Now, the bank got their money, but because where the financing was coming from, it actually caused an issue. Now, we still closed on the property. There was a couple days of delay because they had to revise the contract, but that's how picky these banks are. And what I said before, you have to be very accurate. You need to follow the instructions. You can't change anything. That's an example of that. So it didn't prevent them from closing, but that's how sensitive these banks are, where even if you change where the source of the money's coming from, it causes a hiccup. So wholesaler would probably not be the best, strategy or option for a bank-owned property.
Thank you.
You're welcome. All right. Unless we have any other questions, I want to thank you all for attending this class. I hope you feel a little bit more comfortable working with the bank-owned property, so that way if your client sends you one, you're not terrified or concerned or want to steer them away from it, and can help them out. And of course, I'm always around. Always feel free to reach out to me if you're dealing with the bank-owned property and they respond to you and you don't know how to respond back. I can help you try to figure out, what their mindset or how they're thinking, and kind of help you move forward with that. Okay. All right, everyone. Again, thank you. I'm going to be ending the class.
Good job, Elizabeth. Good job.
Thank you, Teresa. All right, guys, it was nice seeing you all. Again, feel free to reach out to me, email me if you have questions, and I'll see you at the next class, okay?
Okay, thank you. Bye.
Thanks, everyone.
Bye.